In funding news, Canaan Partners closed its latest fund at $800 million. It's the firm's 11th fund and its largest in its 30-year history. Venture funding has been ballooning this year to highs not seen since the dot-com bubble. The surplus of cash helps startups stay private longer with money that would otherwise be raised on the public markets. Here with us, Maha Ibrahim, general partner at Canaan. Thank you so much, as always, for coming on the show. So $800 million, enthusiasm is high, obviously, and you guys actually capped the fund, right?
That's right. That's right. We were well oversubscribed and very fortunate.
So is there enough places to put all of this money that's being raised?
So our firm is a diversified fund, unlike a lot of others. So about 40% of what we do is healthcare and 60% is tech. On the healthcare side, we've had an incredible run of exits, largely due to the fact that we've been very disciplined in certain areas. Same goes for tech. And yes, we feel like there are a lot of areas.
So you've been at Canaan for more than a decade, so your memory goes back. I mean, what do you think of these comparisons to dot-com times?
There's no question that we're in heady times right now. But on the other hand, there's still so many companies that are amassing an incredible amount of revenue, traction, et cetera. I don't see that ending. I don't see a cliff like we saw in the 2000-2001 period. And frankly, there's no reason for that. There's a ton of momentum. There's a ton of money flowing into the system.
On one hand, you have companies staying private longer. On the other, you guys had like 30-some exits in the last 3 years, which is 3 times the average.
Yes.
How's that possible?
In addition to that, what we've seen is that some of our companies have been exiting a lot faster than they normally would. So our average time to exit for our deals has been less than 4 years, and this is both in tech and healthcare. We think it's because we take a franchise approach towards investing. So there are areas that we just go very, very deep in, and we mine them. We mine them in terms of networking, thesis, et cetera. And that's the secret sauce to Canaan.
If a company, if you get the sense that a company would take 10 years to go public or 10 years to exit, would you stay away from that?
No, no, no. We absolutely believe that we're building companies for the long term, but because we're taking this more thesis-driven approach towards investing, we're on the pulse of what the acquirers want and are thinking about, and that just inevitably causes companies to exit faster than they otherwise would. And then there are some that take 15 years, and that's fine too.
So what areas are hot where you think there are big opportunities? Where are you going to put this money to work?
So fintech is still very hot for us, financial technology investments. We spend a lot of time there in real estate and in insurance. We spend a lot of time in cloud, where I spend the bulk of my time. You'll see us do a few gaming deals, again, in e-commerce. And then on the healthcare side, anti-infectives, immuno-oncology, but again, very disciplined in our approach, as opposed to taking an index fund for venture.
Canaan is also celebrating 30 years.
Yes.
As a VC. You have 3 female general partners, which is 2 to 3 more than most other venture capital firms. And I'm curious how that changes the environment inside the firm and in the investments that you make.
It has been such an incredible, I'm incredibly fortunate to be at the table with my 8 general partners, and 3 of them being women. The conversations, we feel, are just a lot more inclusive. And as a fund, we feel like we're reflective of what the true entrepreneurial pool looks like. So that if a woman or an immigrant comes in the door, they're surrounded by people that have had similar experience that they've had, and frankly, much more comfortable.
I know you've been following this spate of sexual harassment stories. VCs have resigned, lost their jobs. Of course, there was a sexual harassment investigation at Uber. Are you surprised by this?
The unfortunate thing is that I'm not surprised. I'm surprised at the horrific nature of it, but I'm not surprised that it's happening. The problem is that, if there is a positive spin on this, it is this. The sexual harassment has happened. I'm sure there are more cards to fall, unfortunately. But it's really woken people up to the need for diversity and inclusion, both at the venture and senior investing table, but also from an entrepreneurial perspective. We need to be bringing up women, entrepreneurs, people of diverse backgrounds into investing roles so that all entrepreneurs feel welcome.
When you say more cards to fall, I know everybody is calling everybody. I'm curious, what kind of calls are you getting?
I am getting a lot of calls. I'm probably spending about an hour to 2 a day, either talking with entrepreneurs. I'm on the board of the NBCA, so the NBCA is taking a really serious look at what's going on and thinking about how to approach this topic in a holistic way. Talking with limited partners of ours. It's certainly top of mind. But
talking
again,
about what?
talking about the fact that it is happening, talking about what we can do. Can we put notions into term sheets? Can we have, again, a more diverse pool of investing professionals around the table? There are many things like hotlines. So there are many notions being talked about right now, and my hope is that we can all come together as groups and, again, make this a more diverse and inclusive environment for venture and then spilling over to the entrepreneurial pool.
And I know women entrepreneurs have often come to you, and
Yes.
you've been their advocate. I'm curious, have you ever found yourself in a position where you're a co-investor with someone who there's bad behavior alleged against that person, either before or after the fact?
I have been very fortunate for that not to be the case, but I'll tell you, I see female entrepreneurs on a daily basis. To a person, each one of them have told me a bad story. And this has been happening for 17 years in my career. So by no means is this a new thing, but we've got to put efforts finally into making it stop.
What are those efforts? I mean, signing a decency pledge is sort of great in theory, but shouldn't everyone just be decent?
It's an incredibly low bar.
Do you need to sign something?
No, we shouldn't need to sign something. But, and I've said this again, I firmly believe that a huge part of this bad behavior stops when you have females and minorities at the investing table and in senior investing roles, because stuff like that will not happen. Their behavior will be checked. And again, from a social psychology standpoint, I'm going to want to invest in people that look like me. So at my firm, we have 3 investing professionals out of 8 as female, the GP role, 40% are females, 25% of our companies were founded by women. That's not an accident, nor is it something that we did purposefully. It just happened.
The average is more like 6.
That's right.
6%
We've reached a tipping point, and as an industry, if we can reach a tipping point, we've won.